Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout this show. Well, the stock market was narrowly mixed last week as major index edged out some gains, but the low caps lagged a bit, with the Russell having just a small loss. Stocks overcame minor sinking spells on news, and again, each time rallied back. We've seen that happening now for some number of weeks. Monday opened lower on doubts about the trade deal, and there was a lot of Hong Kong violence, which is scaring people about China. And then we saw some news come out during the week that everybody was waiting for. We saw Tuesday the market rally into the Powell speech, and that speech, the semi-annual speech that used to be called Humphrey Hawkins. And then the dip came after that, as it appeared that the Fed was ready to pause after their recent 3 cuts and installing what they say is not QE4. We saw on a Wednesday the markets rallying into the Trump speech, which ended up to be disappointing. Everybody thought that he was going to be touting things that would be pushing the market up, and instead the president was quite negative. He was very tough on Powell again. Of course, he wants Powell to take interest rates to zero, which shows you how little the president knows about economics. And then he warned on tariffs, actually. He says if phase 1 fails, well, of course, the tariff situation would get worse. So the market dipped again on that. Some of this news is news that actually probably would have brought big sellers into the market some weeks ago, but the buying is just super powerful, so it's not really shaking up the market. What Powell actually said was that it's a sustainable picture that we have now in the market. Sure, it's sustainable with 1.5% interest rates, but he did warn on government debt, which is interesting. So $23 trillion in government debt ought to scare somebody, but he says that day of reckoning is quite a bit off. You think the day of reckoning is going to come and they're going to ring a bell, and all of a sudden the Fed heads are going to know that this is the time to be worried about government debt? Come on now, that's a ridiculous statement. If there's anything to aim at Fed heads, it's this kind of great experiment that's been going on for this long period of time. And the result is going to be that there's going to be some giant upheaval down the road. And again, nobody's going to ring a bell when that comes. All of a sudden, the markets will be collapsing, and nobody will understand it until all of a sudden they do, and it's too late, and the Fed has nothing left to do. Well, that's my rant for the day. Thursday, we saw the market dip on what was apparent roadblocks to phase 1. And that is that the Chinese are pushing back on the level of grain purchases, and the president demanding something done on the IP transfers. So all of that looked like danger. Again, the market should have gotten hit very hard based on past trading, but that really didn't happen. And then later in that day, China comes out and they lift the ban on poultry purchases. So they thought that was good news, and then the market ticked up on that. Friday, Kudlow came out. Now, Kudlow is the bull spinner supreme mouthpiece of the president, and he said that the U.S.-China deal is very close, and the markets moved up early and have continued up through the day as we get just to about the last couple hours in the market as we're doing this recording. Overall, it was a narrow chop for the market, and buyers are still waiting there to buy any dip, as you could see. We got this very nice upside momentum going on that we keep showing you. It's momentum, of course, the key to our analysis, along with cycle analysis. Momentum strong on all of the time frames we look at in the stock market. And most days, if you look at hourly charts, there are more up hours than there are down hours. So those of you that are scalpers or short-term traders trying to be on the short term of the market, you are fighting the giant wave here, and that's going to give you a lot of trouble. For traders, the majority prefer down markets and higher volatility. So this is a tough period for traders right now, and investors absolutely loving it, of course, as the market moves up. Of course, there are a lot of groups that have not been moving up, and some of those considered value. We're going to talk more about that a little bit later on. While our analysis shows the market would move up into early 2020, the road is likely to get bumpier here. As we get over 3,100 on the S&P 500, we're getting into a big, wide target resistant zone there, and that's between 3,100 and 3,160. And that is likely to bring some more action in here as far as two-sided trade goes. That means that the stocks that have lagged, that were probably lagging for a reason. I want you to take a look at a video that I did on Thursday. It's really good. We've gotten some great compliments on it. It's our big picture analysis on the energy sector, on oil and energy. And it's a good example of a value trap, of analysis that suggests that the weakness that we see in the energy market, well, it might be a bit early to be buying in there. So I want you to go watch that video where we do that big picture analysis on oil and energy. You need to be a level 2 member or higher to be able to watch that. So if you're a free member or level 1, just write to Matt at askSlim.com and ask for an upgrade, and you'll be able to watch that. And with stocks overall at these extremely high PEs, there is danger out there, of course, and the market is supported by a very activist Fed that we have had, well, since Greenspan. Greenspan set this trend in here, and while they say this is a new normal, this is maybe the new normal that our Fed has created, and the low interest rates are what's supporting the market, and that's why we have high PEs, because we have earnings that are based on the very low interest rates and the stimulus supported by the Fed. Imagine if interest rates tick up at all. Well, you saw that happen last December. Well, earnings will get annihilated if that happens. So that's what we're looking at coming down the road. Overall, this low volume rise will likely continue, but then take a different nature sometime, well, we think pretty soon. If the trade deal finally gets done, the phase 1 deal, then all of these bullish comments that keep coming out that are pumping the market up, well, that'll be gone. So they won't really have that. The bond market is already forecasting that the decline in rates are done, and long-term rates have been going up, and we think that we're going to see a lot more of that. I'll show you that in the short-term view. And then, of course, we have the election coming on, which is going to be so wild. Investors, their calm will only go from FOMO, fear of missing out, to a lot more focus on risk. So for now, we're going to look for choppier markets than we've had, continuing in the uptrend. And we actually think that there's going to be a brief swoon into December and then rally again into January, February. So I'll show you that in the short-term view also. So a lot of very interesting stuff coming up in the show. Overall, we're going to say stocks mixed for the week. S&P, Dow Jones, NASDAQ up fractionally, Russell down just a touch. Bonds, they're rebounding. The 30 years popped about 2.25 points into a resistance zone. In our short-term view, we're going to show you why we think that is a sell area. And I just shorted bonds just now, actually. Gold up about $7, and the signs are that it is putting on a bottom in here that we expected, but they're only minor little signs, not something to get overly excited on. And I'll show you that also. The dollar down about 0.4. We think that was a temporary top in the bond market, maybe a little sloppy action now, which will help gold, and then probably some higher prices in the dollar market coming up as we think rates will continue up. When interest rates go up, it brings bids in the bonds. Oil, choppy, sideways week, not making much change at all. So that is our opening. I want to tell you about this announcement. We're coming into our beta period. It's just starting now for our trade ideas. So that has begun actually, and this is a big upgrade for us based on what we did before, which were trade setups, which we put in 1 or 2 a week. Now we're putting in 2, 3, 4 ideas, trade ideas every single day. And this is really to help you in your trade planning. I want to show you right now give you an idea of what this looks like. And if you're an askSlim member, whether it be a free member, level 1, 2, 3, or 4, you're in this beta test right now. So you're going to be able to see what we're doing. You're going to be able to share in this and then give us your comments so we can, of course, improve on what we're doing. So let's take a look here as we jump into the askSlim site and into the level 4 dashboard. So this is what our level 4 members see, but of course some of these things will be available in our beta testing period to use. So let me switch over now and roll down in here. Here you could see our technical reports that we put out there. A lot of these for our level 1 members and above. This is where we get into our trade ideas and member chart requests that we do analysis for individual members. Here are our proprietary study and indicators right in there. And then here's the library that we have, 8 different categories, over 400 videos, you're probably getting over 500 now, that level 2, 3, and 4 members can really build their understanding of markets through that. I want to go back over here and look at trade ideas in the beta, because that's really what the focus is right now, and I want you to see what you can participate in and of course help us. So I'm clicking on trade ideas beta right there, and it's moving over to that page, and there's some description right over there of what the trading ideas are. And as I scroll, you can see right over here, we had trading ideas in 3 stocks today on 11/15. I'm not going to click on those because I don't want to give too much away of the new ones right in here. Here's the trade ideas for McDonald's right over there. You can see, and First Majestic and Chipotle on yesterday. We did GLD right there 2 days ago, along with the EEM, the emerging markets, and the Aussie versus the US dollar. And you can see here we did actually 5 of them on the first day we started beta testing right over here. Let's take a look at just one of them in here for you to see. Let's look at the Russell that we did a few days ago, and you'll get an idea of what a trading idea looks like. First of all, you can get an overview of what all of this information means right there by clicking on the overview, and it'll give you a description of what we do in each of these. And here you could see this trade idea right over there. Let me just get this a little more centered for you so you can see that. What we're doing is IWM. You can see that right there. It's a long bias right there, and intermediate time, we're going to give you a time frame. We think this is for about 3 to 8 weeks, so it's a swing trader or option trader type of holding period. The trade type is a trend continuation, and it's testing the support zone. So what we believe is that the uptrend is going to continue, and that's why it's a long bias. Here's the favorable entry range. These are normally fairly wide, because what we want you to do is use this idea and then find the most favorable entry time frame based on, well, how the markets are acting. This is all about helping you design your own trades. We're not giving you trades. We're not giving you entries and exits. We're supporting your work that you do so that you can be better at what you do. And then you could look at the analysis we do and learn from it. It is just so different than any other website. And this is what's going to grow your capabilities and really improve you being a trader. Here's our projections and target zone for the IWM during this intermediate period that we're looking at right there. And if it closes below that number right over there, we're going to reevaluate it at that point. And we may take it from an active trade idea to an inactive trade idea. And so you can just know that, and here's the date right over here that was put on as your trade idea reference. So this is what it looks like. It's just a super looking offer. In other words, it gives you just a ton of information in there, and we're going to encourage you to become a free member if you're not, and if you are a free member or higher, just make sure you look at these every single day. You're just going to get a ton of value out of that. So that's the trading ideas. A brief look now at the second of our beta tests that are going on right now, and this is being released today, the new Slimulator Momentum Tracker. This is our proprietary indicators in here that we use in 3 different time frames. And you can see on the right, long-term, intermediate term, and short-term. This is an outlook for investors. So you can see right there, outlook is for 3 months. Our algorithms generate overall directional bias that you can see right in here. It gives you the general bias based on all of the information that comes out of the proprietary indicators in here, and then our outlook per symbol. And you can see in this is basically the FANG stocks, and I add in Microsoft because it's a heavyweight there, and Apple, Facebook, Microsoft, Google, they're all in very bullish conditions. Strong positive conditions suggest minor declines and higher prices. So in other words, the minor dips are really buying opportunities for investors. Amazon is a neutral condition right over here, and it's mixed conditions, and you can see all of these indicators are neutral right there. And Netflix, it's slightly bearish to neutral. Why do we say that? Well, the long term is negative. The short term is giving you a positive there. So that says that we're getting a bounce in a negative condition. So we overall are slightly bearish to neutral. So you can get a sense for just this amazing, great app, essentially, that is available to you right through the askSlim website. So we're beta testing this right now. This, again, for holders of 3 months or longer. And with our new Slimulator, and thanks to our great financial data partner, Intrinio, you'll be able to search our proprietary askSlim momentum readings on over 1,000 symbols every day. This is the beta test for this app for askSlim members, and if you're not a member, try it out for free. All you have to do is become a free member, and just go to the website and join, and this beta test period will last for about 3 weeks. So thanks for listening to all of that. I really wanted to share that all with you, and now we're going to get into our best 5 stocks of the week. So what we're going to look here is switch over to from this S&P 500 chart over to the best gainer for the week, which is Roku. So we're looking at 2-year charts in here, and this is interesting because Roku was up 29% on the week. Bank of America says it's a buy, and there's no denying it's improved. Now, there's resistance coming up here that we're looking at. Our opinion in this stock was that it was rolling over. You see this big dip right over here, and it held that support and interestingly took off and then went over to the 78.6%. When it does that, we have to look at the potential for our cycle shifting. Either way, we think this resistance area right over here, 159, 160, is going to stop it on the upside. If it gets through that, it will be very clear that it's in this rising phase on the shifted cycle. So sometimes it's not perfectly clear to us, and sometimes we get it wrong, as this was a reason to be bearish in Roku under most conditions. In this case, it really has improved. We're going to honor that and always be flexible in our analysis and say, this is improving. 29% gain, and this is a place it should likely stall. If it gets through 160, you're going to know it's a much better stock. Dillard's DDS, the next one we're going to look at, up 13% on the week. This one is another one that the cycles were perfect, and you can see the beautiful rhythms in here. These are the ideal cycles on the bottom, and on the top is how they actually really formed. And you can see when you get nested lows, when the two of them are coming together, you get into declining phases. as you see here and here and here. And now it's moving up. This is the minor cycle right in here that is giving you that gain. And you could see it kind of got up close to that resistance and then backed off, but we think it's going to try it again. They're much improved. A big surprise on earnings on the big beat in there. Analysts upgrading the stock, and we're going to say it tries again for that area up near $86 and then stalls. The next one we're going to look at, the third gainer, best gainer in the stocks that we look at, is Rockwell, ROK. Look at this giant move up here. Earnings beat, and we were positive on defense stocks. We gave a bunch of them that we thought were going to rally. We thought that based on this pattern right in here, that this little breakdown, which we thought was negative, we didn't think it had a lot of upside potential. We thought it had some, but this was a lot. So we actually missed this one again. And while the group has done well and the stocks we've liked in there have done well, Rockwell was not one we thought would be explosive, and it was explosive. Big gains in there, and up to an important level. We think it's going to try to get up there again, up to that area between 207 and 210 in the next couple of weeks. Next big gainer is in the semiconductor equipment category, which is Applied Materials. This is magnificent. Beautiful cyclic action. We were bullish, and bullish. The target zone hit in this cycle, target zone hit in this cycle. These are our timing spikes here. It worked perfectly as the market got into this cycle support and then moved up very sharply. This was strong and swamp cycle. What does that mean? Well, if you take our cycle analysis workshop, you'll learn. And that is when there's a corrective zone right in here and it doesn't correct, it moves sideways as you see there. What that tells you is that this upward component is so strong, it won't let it correct. And what happens, it releases and moves up sharply again. So now it's getting up into a problem area. It's had this big gain, 12% or earnings big beat, analysts upgrading it like crazy. It's gorgeous. And at the same time, I think it's in an area where it's going to start to stall a little bit in here. AMD, another one of the stocks in this group, moves up 8% on the week, and analysts upgrading that one. We think it's overbought based on the intermediate patterns and likely also to stall. Now, one of the ways that we show overbought conditions, and I do videos on this often, is when a stock moves far away from its 34-week moving average. So here, this blue line is the 34-week moving average right over here. You'll notice it got far away from it here on the upside. It came back to it. It got far away from it on the downside, and it came back to it. Now, look at the distance from this price to the 34-week moving average. It is excessive, and it's going to be very hard for Applied Materials to continue to move up. It's the same thing for AMD. Disney gets a big uptick for the week. For Disney, 6% on the week. It's backed off a bit as it came up to that fib extension right up over there. And this big gain right over there based on analyst upgrades, as Moody's actually upgrades the credit on it also after they announced that 10 million plus subs came on after their streaming launch. You see this just a few weeks into this rally off of the low. It probably has more upside. We're going to look for a test of 152. It's now 143, so that's pretty good for this stock, and we think that there will be more attempts to the upside there. That's the best 5 stocks for the week that we're going to show you, and now we're going to move into the worst 5 stocks for the week. We're going to show you CSIQ, Alcoa, Cisco, Expedia, and Win. So let's take a look here as we switch from Disney to CSIQ. CSIQ moves down 8%. Earnings missed. Analysts are downgrading all of their targets, tons of them. And, there's volatility often that comes into earnings periods, and you can see that. Patterns do suggest in here, as I look at this, that it's going to bottom soon. And we talked about that, and we talked about that also for SunPower. So SunPower down 7% on the week. We think it's going to be bottoming. CSIQ in this capitulation down 8% on the week, and we think it's going to bottom here. Still, I want you to see this is a negative configuration. It happens after this high fails to make this high over here, and that says that the next rally will likely fail again. However, It's now trading over here at 15.12, and our projection is for it to get over 18. This is a worthwhile trade for active traders into the January period over here, as we think it's going to get a bounce. This stock has a lot of earnings volatility, and so it doesn't surprise me that it acts like this. Alcoa is the next one we're going to look at, down 5.5% on the week as analysts downgrade this stock. Now, this has our colored phasing in it, where you see the green phasing gives you the rising phases, the yellow the corrective, and if it gets below key supports, it turns red. You have the same thing right over here as downtrends have been occurring. Green, yellow, red, green, yellow, red, green, yellow, red, and now all green. You can see that. And what's really interesting about this is that since it has not gone into the correction, it actually has an inverted head and shoulders built in there. That points to the measurement way up over here sometime early in the year at $30. That would be a huge spike, wouldn't it? So we're looking for potentially some sloppiness into year end, but then we think the stock is going to do better. And with this formation, I think it really has a strong potential. It's going to need to get over that neckline at about 23.5 to really break out. So this dash line is the DBB, the base metals. You can see how closely it tracks base metals, and this looks like a bottom forming. So we're liking this, and we think that first quarter next year is the time it really could move up. Cisco, a stock that we've been negative on, has a rally and then fails. So this is a really bad pattern where you have this big breakdown, this red zone, the attempted rally, and then this big break. That is a very significant occurrence, and it creates this new big long red zone. It says that, well, with a small possibility that this decline belongs into this cycle, it's more likely that it's in this cycle, and we're gonna, as long as it stays below this level right over here around 48 and a half, it's going to remain negative, and we think that the probabilities are very high that it's going to get down to about $40. So all the earnings beat, but their guidance was really weak. They expect 3 to 5% decline in revenues. Analysts hated that, and there's tons of them cutting their targets on that, and we are too. We're going to lower our target and say this is going to go test this low down over here right around $40. So that's a look at Cisco. Expedia, we showed you last week, is a giant loser, and we thought it had more time to decline, and it then followed through. This stock in here, to us, and I'm not sure where those cycles went, the cycle brackets are gone. Wow. Let me show you how we put cycle brackets in as they disappeared. So you see this key low right over here, and we're just going to line it up on these other lows, and you see there's a low due right over here, and that says to us that you can expect a rebound. So the stock got down to 94, and now we're looking for it to get up to about 104 in here on a rebound in a very, very bad looking stock. And you can see that is a sell zone right over there. So we'll look for a bottom in here and a rebound. Earnings 2 weeks ago, terrible, and the bottom due at least temporarily for in just the next couple of weeks. The last one we're going to look at is Win, down 4.5%, and this is about the Hong Kong protests going on and the violence in there and the fear that it's going to spill over into Macau and that people are going to stop going there to gamble. I like this pattern for now. It's dipping down in here. Now, let me tell you that LVS is one that we're looking at also that may be less susceptible to this, and the pattern may be stronger in LVS. So we're looking at Win and LVS, Las Vegas Sands, as a likely stocks to move up again. Here's your upper resistance zone. The stock moves down to 117.5. And we think it's going to get back up to here, 126 to 132 sometime in the next several weeks. If you don't like Win, take a look at LVS. I think they both give some upside opportunity in here. And we're looking at both of them as trading ideas for the long side right now. So that is a look at the 5 best and worst stocks for the week. I hope there was some great information for you in there. And now we're going to switch over. We always do this, and we're going to look at our our short-term view for 5 major markets that we look at. We look at the light crude market, the gold market, the dollar, the bonds, and the stock market. Now, before I do that, I've showed you a lot of things right now. I've showed you how we do our cycle analysis and all of those charts. You got a good sense for what we do as far as our beta test, but let me tell you that you could have those charts on your thinkorswim platform as a level 4 member. And we send those out with updates constantly. So you get our work right on your TOS platform. thinkorswim, our preferred broker, based on the relationship we have with them and the fact that we do all the stuff on their charts, which to us are just the easiest charts to use. So we really love that. And you want to become a level 4 member, you can write to Matt at askSlim.com. He'll send you a half-price trial to try it out. Also, if you don't have thinkorswim and you use some other broker, no problem at all. Using our Slimulator, which gives you our proprietary algorithm and just tons of great information, similar to what we do for the longer term with the momentum tracker, our Slimulator will give you great information, and we give you the static charts that we update all the time in there on all 84 of our focus list of stocks and ETFs. And futures. So become a level 3 member if you don't have the thinkorswim platform. Again, write to Matt at askSlim.com, and he's going to send you a link for you to get a half-price trial in there for 1 month, and you'll be able to really get a good sense for what we do. That's our little promo that we're going to give you now, and now we're going to switch over from that wind chart over to daily charts. We're going to look at the light crude market, and we'll take a little peek at how we did in the last week. Now, this is a 2-year chart that I'm blowing up here, and I'm coming back in. I want you to take a look in here at the beautiful cyclicality. In other words, if you see the ideal cycles in here, which measure the cycle length from low to low, you could see each of those perfect in there. Just love this. And then this last rally going on right in here. So you can see, we said last week we thought light crude would rally and then begin to roll over. It hasn't quite rolled over. We thought it would test the 58 to 58.60 area. It's done that right now. Everything in line with what we expected. Momentum was strong. So we got light crude correct. We got the gold market right. We were a little bit off in the dollar and in the bond market. The S&P 500 market, we missed mostly. We get a little bit of credit because we talked about the strong momentum and the likelihood that the market couldn't give up much ground, but we did think there'd be a small bias to the downside and test 30.68, but it did not. It only got down to about 30.74, so we're going to call that one mostly a miss. So we get about 65 to 70% accuracy for the week, and we like that. That's what we want to do, be around 2 to 1, because that is a giant edge in your analysis. So light crude, what are we looking for? Well, we're looking for it to roll over. We're going to look for it to get up into this area, which is right around the 58 to 58.60 area, and then have a rolling over. We're going to call it a small down week. Remember, momentum in here is still strong. So while the slim ribbon is rising, we're going to not look for big declines under that condition. That has to change. So you see in here where the slim ribbon was positive and went negative, and then you get some pretty big drops. It did that right over here also. So right now it's positive, but note the projection oscillator down over here with some weakening. So we think that there isn't much more on the upside, and this is going to be a small down week for the light crude market. Gold market / GC, you could see right in here that, well, this is a busy chart. So I really have to help you with this. This dashed line right in here is the dominant daily cycle in silver. This is the minor daily cycle in silver. This is the minor, this blue daily cycle in gold. And they're all coming into this nesting period of a low timing, where on the short term, and for gold on the intermediate term, there's a bottoming time period right in here. Now, we expect gold to begin to get gains at this right near this level. And we thought gold would get down to about this week. 1454, test that level or lower, and it got down actually right over here to 1446. You can see that, and then rebounded right in here. And the dollar's getting a little sloppier. So we're in this minor uptrend right in here, this rising blue. You can see that. And that to me is a time period where we could be moving up. Notice the negative momentum in here still. So we have negative momentum in the gold market. We have a positive cycle right there and a little bit of an overbought condition right over here. It doesn't give you much, that you can count on for big moves. It just says it's likely the cycle will push it up, but the momentum has to change first. So there's right now what it looks like is that you can get up to the top of the slim ribbon right in this area right over here. It's 1475 to 1482. It's going to have to do some work to improve and go beyond that. If it gets over the slim ribbon and holds, then you know that something's going on. This is a big test period. We're going to call this a small up week for the gold market, fighting against and hopefully changing that negative momentum that we have in there. So that is a look at gold. Dollar sign DXY. You can see right in here a mess, right? Well, I'll blow that up so you can see. And the dollar is in an intermediate rising phase, and that gave you that rally. Now, note the small cycles right in here, the minor cycles, and where the two of them came down together gave you a big decline. We anticipated that. And now we're in this rally phase. So there's a minor declining period right in here that goes out to about 1126. November 26th, that period right in here where we think is going to be kind of a choppy down is likely going to help the gold market in here. So if we get that little bit of sloppiness in here, gold can go up, and that's what we're hoping for. So we're going to look for the dollar to have a small week in here, probably attempt to rally and then come down again in there, and then we think that maybe the week after that or so, it can get into a more favorable period over there. So for the moment, we're just going to look for dollar to be on the sloppy side, unless the bond market falls hard, and then that will give you the bounce here in the dollar a little bit. But again, we don't think it'll hold. We just think it will try to get back up there, and that resistance zone is going to stop it and then come back down. So again, it's a little window in here of the dollar struggling and the metals market being able to do better in there. So we'll just look for maybe a little tempted rally here and then coming down again in the dollar market. The market that we're going to look at now is the bond market. We'll look at the 30-year bonds / ZB right there, and look at this now. So this getting underneath this low right over here, we deem this to be negative, and that there's a pretty good likelihood that when it rallies into this sell zone, it's going to reverse to the downside again. So last week we thought it would be an attempted choppy move up and then roll over. Well, it hasn't rolled over yet, so basically we thought it would be a small up week, which it was. It followed the pattern, but we only get about 2/3 credit for it because it really hasn't rolled over yet. I tend to be pretty harsh on myself, and the momentum in here, you can see how negative this has been in here as it failed right here. Note here, when it's negative momentum, the P projection oscillator is overbought. It's a sell, bam, sell, bam, and sell right over here, and it's likely to be moving to the downside again. That's why I put on a short position. I think it's a short-term trade in there in the bond market. So I'm so busy with production and running the business and trading and all that I'm really becoming more selective on my trades overall. We give you a ton of trade ideas right now. And the idea is just to pick out the ones that are best for your style, the ones you like best, that match up with your analysis, just like I do, right? So that's a look at the bond market. We're going to look for it to move down from these levels. And now let's look at the stock market. So what we looked for in the stock market was a choppy market that then moved down and was getting ready for another move to the upside after that. Well, this is actually a couple days shorter than I thought it would be, and I thought this rally would come next week. Well, that's just not the way it is in a bull market or bullish market, because when you have periods where there's potential risk of little short-term dips right in here, they're just so anxious to buy them that there's no downticks, right? So the correction was totally sideways in here. Look at the white bodies. What that means is that every day, if the market is lower, it just closes above where it began, and that shows you how much buying is going on in here. Like I said early in the show, there's so many up bars versus down bars on the hourly charts that it just doesn't make sense to be short in here whatsoever. Now, I said that I thought there was going to be a dip coming up. Maybe the market swoon for some days and then move up again into January. This is that swoon period right in here. I'm going to say it's from right around November 21st or 2nd, so that is about 4 or 5 days from now, trading days, all the way here through into about the first week of December sometime. This is when there's some risk for a little bigger correction, but big deal. I mean, I'm projecting it down to about 30, 60 or so. It's not very big. I think maybe 60, 70 point drop in there, and then moving up sharply again. Now, you see this little blue arrow in there? That's a signal that I have put in a projection when you see those little blue arrows. So there's the fib extension zone from the weekly chart. The top of that right over there is at about 3158, 3160. That's really where we're looking for it to get up to at a minimum projection now up into this late December, January period. So if it gets into this area right over here in this dip in December, then that's really the buy zone. You can see that's a buy zone. It's rising because we're still making higher highs in here. So we're going to look for the market to just chop around a little bit higher, then begin to roll over and get ready for maybe a shakeout swoon before the market then moves up in any significant way again. Now, what would make this worse? It's this level right over here, because where this cycle bottomed right there is a key short-term support. So that's 30.21, 30.22. It would have to get below that to change the intermediate pattern to negative. Right now, look at the upside momentum in here, quite strong. You can see it can't get oversold. That shows you strength. Didn't get oversold here either. So there's a lot of strength that we see in here, and I show it to you in so many ways. Momentum is just super strong, monthly, weekly, and daily. That has had me positive in this period. And like I always say, I am bull bear agnostic. I'm going to bring you what I see in the charts because I want you to be able to do the best that you can. I mean, here I am. I'm like the color man in a football game, right? I'm sharing everything with you that I think is where all the action is and all the important stuff. And that's what we bring you every single week. We have Matt and Arvi that are working like crazy to bring you fantastic information at all levels and the beta test that's coming out. So make sure that if you're not a member, become a free member and join in on the beta test. And everybody, all of you, the thousands out there that watch this all the time, please do send in your comments. Try the beta test and let us know what you think. We want to improve everything that we do. And that's up to you sharing with us on what your thoughts are. So that's it. I mean, I brought you everything I had to bring you today. I think that there was a ton of great information in here. I want you to be so careful. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising.